Now, for our Monday morning markets update, thanks to our partners Forsyth Barr, we'll go to Zoe Wallis, investment strategist there. Zoe, good morning, good to see you.
Good morning, Ryan. Good to see you as always.
Right, we've got some news from overnight on the futures to do with Fed rate cut, the chances of it happening this week. We'll get to that in a second. But monthly food price data here in New Zealand is out. What's it telling us?
Yeah, so we're going to see that out this week for August. Big question mark over how much pressure we're still seeing coming through on the price side. What we saw last month is that food prices are running at about 5% year on year, so starting to creep higher again. What's quite clearly coming through is actually when you look at the areas of price pressure, it's in those sectors where our dairy and dairy exports, our meat exports are all doing really well from a price perspective. And so you're seeing the flow and effect of what's been good for exporters on one side actually hurting the consumer on the supermarket shelves, unfortunately. So things like meat prices are running up about 20% year on year.
And back here, we will of course get our GDP data for Q2 of this year, and most are expecting contraction.
Yes, that's right. The clear consensus is for a negative GDP number over Q2 of about 0.3 or 0.4%. I think what's probably more important now, when you think that we're almost at the end of September, so almost at the end of Q3, is really how things are faring as we head into that sort of final 3 months of the year. Indications today are that things are starting to improve. We had another sort of more positive electronic card transactions number out the other day, which suggests that retail sales are starting to pick up, but it is still remaining patchy. And I think it is a case of very much, the regions versus the rest of the country at the moment.
And even though inflation ticked up in the US, and we spoke about this last week, but even though inflation ticked up in the US for the monthly data, jobs has got them worried, and odds are on, the markets reckon, for a cut from the Fed this week.
Absolutely. The market's pretty much fully priced for a rate cut from the Fed this week. So that's on Thursday morning New Zealand time. So very much expected to cut. And that's, as you say, because the labour market has deteriorated and those job numbers just aren't looking great coming through. Now, obviously, they're still pretty cautious about what's going to happen with the flow and effect from tariffs. And we're still seeing a bit of price pressure coming through and expecting to see more in coming months as you see the flow and effect from those tariff rates that were put in place at the start of August really start to be felt for importers. However, the Fed's probably comfortable enough that inflation is likely to be a one-off sort of temporary price increase. They'll be keeping a really close eye on that, but I think they've got that dual mandate. So they've got to pay sort of equal weight to what's happening in the labour market and the inflation side of things. So that is expected to see them cut this week, and that'll be the first move that they've delivered in about 9 months. Most consensus forecasts suggest at least one more rate cut from the Fed this year, if not 2 after that.
Yeah. And can you just tell us, for those watching this morning going, I don't really care about what's happening in the US, just tell us why this is important for not only the world, but for us?
Yeah, great question. Look, so what really matters from a US perspective? Well, first of all, the US is the world's biggest economy. For most people who've got a bit of KiwiSaver funds, they will have some money invested in the US equity market, and lower interest rates tend to help support equity markets as well. That's both through a valuation perspective and making it cheaper and easier for businesses to borrow and invest. The other element is that what happens with longer term interest rates in the US actually impacts our local mortgage rate curve as well. So once you get out beyond about 2 or 3 years in terms of your fixed mortgage rates, actually the US, where their US interest rates go, has quite a big influence on what happens to those rates here in New Zealand as well. So it can push rates up or down in terms of those longer term fixed mortgage costs as well.
So across the Tasman, labour market in Australia are quite tight.
Yeah, absolutely. So, you can see quite a sort of divergence between New Zealand and Australia in terms of our labour market outlooks has been happening for some time and expected to remain the case. So we've got monthly employment data out in Australia this week, and that's expected to show the unemployment rate holding steady at 4.2%. A little bit of softening coming through in their labour market, a little bit of less government hiring perhaps, but still pretty robust when you compare that to a rate of 5.2% over here.
Yeah, absolutely. Quite a big gap indeed. Zoe, thank you for that. Zoe Wallis, investment strategist with Forsyth Barr. Thanks to our partners, Forsyth Barr, at 6 minutes away from 8 o'clock. We'll get to the boys with sport.